Hello everyone, welcome to the very first episode of Finance and Innovation Insights. In today's video, we're diving into an exciting and highly debated topic: real estate versus stocks. Which one will make you more money in 2025? Both have built fortunes. Real estate creates tangible wealth you can live in or rent out. Stocks, on the other hand, grow your money in the background while you sleep. No tenants, no repairs. But 2025 is shaping up to be anything but predictable. Interest rates are shifting, inflation's cooling off, and global markets are recalibrating after a roller coaster few years. So in this episode, we'll look at the data, past performance, 2024 trends, and 2025 forecasts to see where smart money might flow next. Let's jump right in. Before we predict the future, we have to understand what just happened. 2024 was a year of stabilization. Inflation dropped closer to the Fed's target. Interest rates finally plateaued, and investors regained confidence. But while the stock market surged, real estate stayed sluggish. The S&P 500 gained around 18%, powered by AI and tech growth, while US home prices rose only about 3% on average. Mortgage rates peaked near 7.2% mid-year before easing towards 6.5%. That kept many first-time buyers out of the market. By contrast, investors in equities rode a strong rebound, especially in big tech and energy. So 2024 ended with stocks looking hot and housing looking lukewarm. But can that momentum last? Estate decisions leading to greater long-term success. Real estate in 2025 is walking a fine line between recovery and restraint. Analysts expect the Federal Reserve to begin gradual rate cuts, which could unlock pent-up demand from sidelined buyers. However, affordability remains a major hurdle. The median US home still costs around $420,000, and even a small drop in rates doesn't fully offset years of price growth. Realtor.com projects home prices to rise modestly, about 2 to 3% in 2025, far below the double-digit spikes we saw during the pandemic. Inventory remains tight, roughly 30% below pre-2020 levels, which means prices are unlikely to crash. Top growth markets include Austin, Tampa, Raleigh, Nashville, and Phoenix, where job growth continues to attract buyers and renters alike. So while real estate may not explode upward, it's poised for steady, inflation-beating growth momentum, allowing them to pivot strategies in a timely fashion. On Wall Street, 2025 begins with optimism, but also caution. Corporate earnings are expected to grow around 8 to 9%, with sectors like AI, clean energy, and healthcare leading the charge. Major banks like Goldman Sachs and JP Morgan forecast total returns near 9 to 10% for the S&P 500 this year. But valuations are high. The tech sector's PE ratio sits around 28x, compared with a 5-year average near 24x. That means even good companies need exceptional earnings just to justify current prices. Some analysts warn that short-term correction could happen if rate cuts are slower than expected or if global demand softens. Still, the broader sentiment is bullish. As AI adoption accelerates and corporate profits stabilize, stocks could continue their multi-year climb, albeit with more volatility than before, so let's put the two side by side. Real estate offers leverage, stability, and tangible value, but it's slow and expensive to enter. Stocks are liquid, fast-moving, and easy to scale, but they're also more volatile. Historically, the S&P 500 has returned about 10% per year, while U.S. housing appreciation averages closer to 6%. However, real estate investors can use mortgage leverage, borrowing to amplify returns. For example, a 20% down payment on a property that rises 6% in value effectively delivers a 30% return on your cash before costs. On the other hand, stocks allow instant diversification. You can own hundreds of companies through an index fund with almost no maintenance. It's liquidity versus leverage, two very different wealth-building engines. Now, let's talk income. Real estate's biggest advantage is cash flow. Rental yields in many U.S. cities range between even 8%, and you can adjust rent over time to match inflation. Add in tax deductions and depreciation benefits, and the real after-tax returns can beat many stock portfolios. Stocks, on the other hand, offer dividends, averaging about 1.4% for the S&P 500, plus long-term capital gains. They don't hedge inflation directly, but corporate profits tend to rise with prices, which helps preserve purchasing power. Here's a quick comparison. If you'd invested $100,000 in the S&P 500 in 2010, it would be worth roughly $460,000 today. The same amount in real estate, compounding at 6% annually, would grow to around $240,000. However, real estate provides steady monthly income and the power of leverage, which can dramatically change that equation for active investors. So what do experts think? According to Goldman Sachs, housing prices should stabilize through 2025 as supply remains constrained. Zillow expects moderate gains, particularly in southern metros, where migration is still strong. Meanwhile, Morgan Stanley believes equities will remain the best-performing asset class, led by continued innovation in AI and productivity tech. Bond yields are expected to settle near 4%, which keeps stocks and real estate comparatively attractive. But remember, regional differences matter. Real estate in high-growth cities could outperform national averages, while certain overvalued tech stocks might underperform the index. Diversification is still your best protection in uncertain times. So, which one wins the 2025 showdown? If rates fall faster than expected, real estate could surprise investors with strong leveraged returns. If corporate earnings stay solid and innovation continues, stocks might once again lead in total performance. But the truth is, you don't have to choose one. Many successful investors use both: real estate for stability and cash flow, stocks for growth and liquidity. The smartest move is building a portfolio that benefits from both rising asset values and compounding market gains. So whether you're buying your first property, adding to your stock portfolio, or just watching the markets evolve, 2025 looks like a year of opportunity for well-informed investors. Thanks for watching the very first episode of Finance and Innovation Insights. If you found this helpful, don't forget to like, share, and subscribe, and share your thoughts in the comments.